sustainable banking. And with me is Benon Okwenje, who is the General Manager, Financial Markets at Centenary Bank, highlighting for us all those details that we need to understand in regards to banking, sustainable banking, the opportunities that are there for you to tap into in case you want to join it from the banking, perspective. But this time, I want us to hear from Benon about the journey of Centenary in regards to digital journey. How far has it been?
Yeah, our digital journey, it's an ongoing process. It's not an event; it's a process. Our aspirations are to be a smart bank, and this is sooner rather than later. So there are a number of things that we've done, and I think we're on the right track. If you look at about 90% of our business, the contribution to our business comes from outside of the banking hall, which is, I think, quite impressive. Most people don't realize that, but it's actually true.
Outside the banking?
Outside of the banking hall. So we have the big branch network of 81 branches, but if you look at the contribution to our overall business, 90% of it comes outside of the transactions in the branch. Sente Mobile, which is our mobile application. We have about 1.1 million subscribers. I've talked about our agency banking, Sente Agents. We have over 5,000 agent locations. That's about 43% of the overall market. So, we use cards. We have about 1.2 million users of our Visa cards. We offer online banking to our customers, and then if you talk about online account opening, digital account opening, we recently launched the Sente Express, Sente on the Go. So in terms of our journey, I think we're on the right track, but it's an ongoing thing. Technology moves really, really fast. Things are changing really, really fast, and so that's what it's been. It's an ongoing process, but we're on the right track.
All right, and any opinions on what the future is for banking?
Future banking, that's interesting. It depends on how far you're looking at, but generally speaking, obviously technology is going to continue to change. We're going to see an increase in the use of things like analytics, biometrics, in terms of being able to facilitate, serve your customers in a more efficient and easier way. Being able to service them through those channels, from everything from shopping to payments. So the future of banking as a bank, if you are going to remain relevant, then you have to embrace the fast changing technology. You have to be flexible in terms of adopting an evolving business model in order to react to the changing technology. Most importantly, you have to put customers at the center of your strategy. When you look at technology and the change in technology, for the most part, it is born out of the changing customer needs. That's where technology comes from. But if I'm to look really ahead, say, 20, 30 years ahead, there are some things that probably I can predict that will happen in terms of the future of banking. I do feel that brick and mortar banking, this is the physical branch network, will be reduced. There'll be a significant reduction in that. I think things will probably move all digital. We already have digital banks that are purely digital. They don't have a physical presence. That's already in play. But I think a reduction in the physical branch network will reduce. I think cloud computing is definitely going to be in the increase. We're going to reach a point where the bulk, if not all, of the enterprise banking applications will be on the cloud. I think 50% or even higher of payment transactions will be initiated outside of the banking. So I foresee a situation where you just have a platform or an app and it does everything, not necessarily connected to the banking, at least on the front end. I mentioned fintechs and the growth of fintechs all over, even in our market. I suspect that a few fintechs, one or two fintechs, will eventually at some point be the largest, one of the largest financial institutions in the world. So some of the big banks internationally, I think you see a couple of fintechs actually join that club of being the largest financial services provider. I think the costs of banking will significantly reduce as technology evolves, which is a good thing. But on the downside of it is, I think there'll be less of a human interface. You know, already we're looking at things like artificial intelligence. We're looking at things like robotics and all of that, which requires less human interface. But at the same time, it reduces the cost of doing business. I think you find one-stop shop financial institutions. So you have like a Centenary Bank, which does banking, but also provides medical services, but also provides, you know, you see more of a one-stop shop sort of company.
I can see some benefiting the public, some, you know, benefiting the banks. I don't know.
No, I mean it's
balance.
no. The world moves and everyone finds their place. I think at the end of the day, for you to be sustainable, it has to benefit the majority. But back to what I was saying, in terms of the technology, I think cards will disappear. I'm sure you have a number of cards, Visa. Those I think would disappear at some point. I think there's going to be a lot of consolidation, meaning that you will have fewer financial institutions, but much bigger. So definitely that is going to happen. ESG, we've been talking about sustainable banking, environmental, social governance. That is going to feature more prominently in the future. And from what I see, it's actually going to be a key determinant of why an individual will pick a particular financial institution to partner with. They may look at their ESG credentials and say, hey, what are they doing with ESG? Are they doing enough? If not, then I'm going to go with Bank A as opposed to Bank B, etc. Of course, you can't, it would be wrong for me not to mention things like blockchain. I think the blockchain technology will be used by literally every financial institution. No, that's different. Blockchain is like a ledger. It's the technology behind the cryptos that is used when you look at things like Bitcoin and what have you. So that technology, and it will be used not just in banking, but across many industries. Speaking of cryptocurrencies, definitely those would be on the rise. When you look at things like digital fiat currencies, when you look at things like, already we're starting to see CBDCs. What that is central bank digital currencies. Okay, so even central banks are starting to realize that you know, the world is moving in a particular way and they can't sleep. We know that Nigeria the Central Bank of Nigeria has issued CBDCs. I know there's talk, Kenya has done some studies, and internationally they're doing that, and which also leads to me thinking that cash is going to completely disappear. There's going to be a time where there is absolutely no cash. It's simply digital, whether using the digital currencies or cryptos and things of that nature.
All right, and let me cross you to your general overview about the current financial markets in Uganda, and then is there room actually to improve them? What is your perspective on that, your opinion?
Wow, that's it's a pretty broad question. So just an overview of the financial markets. I can talk about the banking sector to start with. You know, there's 24 banks in this market. Total assets, when I last checked, about 34 trillion. You know, $9.5 billion supervised by the Bank of Uganda. But of course, we also, it's broad. So you have the tier 1, the tier 2 banks. You have, you know, financial institutions which fall even below that, still supervised by the Bank of Uganda. But in terms of improvement, there's many things to consider. So one we talked about earlier is cost, right? There's a big complaint that interest rates are really high in Uganda, but why are they high? So again, the cost of capital, the cost of setting up a bank, the cost of infrastructure is expensive. So how we can improve is if the infrastructure can also be, you know, improved in that regard, which makes it easier. Of course, things like having a national ID has helped, so that in terms of customers can be identified. Credit reference bureaus have helped, so we know who the borrowers are. So there's quite a bit to do. I think there's a role for government to play to kind of improve and make the environment easier. Probably consolidation may also lead to more efficiency. We know that recently Bank of Uganda is in the process of increasing the capital requirements of commercial banks from 25 billion to 150 billion. So maybe with consolidation, we'll see more efficiency. Potentially we could see interest rates come lower. But you have to look at the structure of our market as a whole to get a full picture as to why you find that the interest rates are high. So Uganda, as a country in the region, we have the lowest savings culture in the region. At least savings per capita is the lowest. So basically, as a country, we have a very small pool of savings, which means for long-term financing, the cost of those funds is expensive because there's no long-term savings. And then when you look at the role of commercial banks by nature have short-term liabilities. Okay? We're funded by our deposits. You're expecting our banks to fund on the longer end, yet there are no long-term funds to invest. So I think the costs and related issues around that and the structure can explain why banking is expensive.
Okay, and the other factor I was trying to say from SMEs, we've interacted with a number, and when they come to you people to get some credit, the interests are high, and they're highlighting that they're competing with, the domestic borrowing that government does.
Yeah.
How true is that?
Yeah, it is true, and the numbers don't lie. So total outstanding private sector credit. Private sector credit, all of the loans outstanding among all the banks is 19 trillion shillings. Okay? That's about $5.4 billion. This is all of the outstanding private sector credit. If you look at all of the money that government borrows through treasury bills and treasury bonds, it's 30 trillion. Do you understand? It's significantly higher than all of the outstanding private sector credit. So, and what you call that is the crowding out effect. Private sector crowding out. Of course, we appreciate government has many plans. Its role is to build the infrastructure of the country, to provide services. So definitely that has to be funded from somewhere. So what they've leaned on heavy is the domestic borrowing. I think there's more work around on the fiscal side, our tax collections. There's more, I think, that needs to be done in that space. Again, if you look at our tax to GDP ratio, one of the lowest in the region, I think it's about 12% compared to our neighbors, which are 18-19%. So I think government probably needs to work on a more efficient way of collecting taxes, which will then let them reduce the reliance on the domestic borrowing from commercial banks, which then would free up a lot of liquidity to place with the private sector and the SMEs that you mentioned.
All right, thank you, Benon. And as we wind up this particular discussion, if you could share any parting shots with us.
Yeah, first of all, thanks so much for having me on the show. Back to oil and gas, it's an extremely exciting time. I think, this is a seismic, once-in-a-lifetime event. And I'm hoping that all of us together, including government, all stakeholders, can work on that local content. I think when you look at the size of investments that are going into oil and gas, it would be a tragedy if the average Ugandan doesn't benefit from it. So all of us need to work together to make that a reality. But the prospects are good. I think it's a chance for us as a country to reduce poverty, build our infrastructure, and all of those things. So, and again, I'm hoping Ugandans out there can seize the moment. As Centenary Bank, we hope to be your preferred partner as we embark on this journey in terms of us being able to support the growth, to be able to service and help build the sector, but also Uganda as a whole. And of course, we will plan on doing that. Well, we will do that keeping in mind our environmental, social, and governance matrix that we're infusing into our business.
Okay.
So thank you, Rita.
Thank you, Benon. And that is Benon Okwenji, who is the General Manager, Financial Markets at Centenary Bank. We were discussing banking in oil, gas, and sustainable banking. We definitely call it a day for SMB for this particular Happy Money Making Thursday. A very great coming up. After the break, we'll be definitely having a look at what is so far taking place at Golf Course with the NSSF and Britain Financial Literacy Breakfast. I'm saying goodbye for now. Have a good day till we meet again tomorrow. It's a Friday.
Making some